Course, of course. All right. So next one I'm gonna move to because it's already past 11 p.m. where he is gonna be Rihard, and I want to make sure that he gets to bed at a reasonable hour. So I'd love to hear from you, Rihard. I think that there's a lot of stuff that you could talk to us about. I know that there was tons of pin stuff this week, but I don't want to box you into any holes. So maybe just talk to me about what was stood out to you most this week in the market, what you were maybe buying and selling, and what you're looking at for this coming week.
Sure. Thanks for your concern, Gav. Um, yeah, so basically, this week was very interesting for me. I guess most of my, let's say, big part of my portfolio was reporting. So basically, two of my biggest positions, Facebook and Pinterest. And what I saw from the market was very, let's say, different reactions. For example, on Facebook, people really were surprised by the quarter, and the company really posted great results all across the board. And then it was Pinterest, where, from my take, it was, let's say, good from monetization point of view, and also some kind of, let's say, stabilization of user base, which obviously the market didn't like. So it was a mixed, let's say, earnings reports for me. um, but still, what I found interesting this week was, and maybe also not that positive, is that companies, at least some, are reporting really good results, and the market is not treating them well. Just for example, Apple yesterday reporting, from my take, blowout numbers, and the stock basically finished down on the day. Similar today on Amazon. So it's really, um, the market is not rewarding companies that are performing or reporting good results, which is never a good thing to see. So I guess the sentiment is not really on the side of investors right now.
Fair enough. I agree. I think that it's very worrisome, and especially because I was in a Twitter space maybe 2, 3 weeks ago with Brian Feroldi, and he was talking about what's the ultimate way that we can eventually evaluate companies, right? Because companies are going left, right, and side, up, down, sideways nowadays, really with no rhythm or rhyme. And he said, at the end of the day, it's the earnings, right? Are they a profitable company that's going to make a lot of money long term? Uh, and that's what really it all boils down to. So, do you think it's perhaps just though that because of the short-term craziness in the market, that some of these names are having blowout earnings, but they're down the next day maybe, right? Or they're flat the next day, but over the long term they'll continue to grow, and that we can't expect the market to be anything near efficient in the short term anymore. Is that a thought?
Sure. Well, the way I look at it, it's for some companies, yeah, I feel that way. But also, we have to acknowledge that last year it was really a crazy year in terms of returns, right? For many companies, especially the small cap and medium cap companies, and I feel like a lot of them are not going to provide investors, even in a 3 or 5 year period, the returns that they were expecting. So I really feel that right now you have to pick your stocks really well and know the companies, and basically also look out for valuations. Like, for example, myself, I don't feel confident owning a company in the 50 or 60 times sales ratio right now. Maybe I would a few months ago, but right now I feel like the valuations started to matter again, which is obviously in general a good sign for the market. And you have to really be careful, right? So, um, myself, what am I doing right now? I'm maybe focusing and looking more into companies that are still growth companies, but that could even get a few, let's say, boost from this COVID recovery situation. So companies like Airbnb, Uber, or even Square. So I'm looking at what these companies will do right now. So in terms of earnings, if because the market is really focused on the guidance as I see it right now. So everybody is looking for guidance for Q2, for Q3, and these are the companies that should provide with good or even great guidance, and we'll see how the market reacts. Because if it doesn't react positively even to these companies, then you have to be, at least in the short term, a bit worried and have to be prepared for a few, let's say, flat to maybe even red months ahead. So yeah.
Yeah, I hear that. That it could be a little doom and gloom. Some stuff all over the place for sure. So we just went through a fantastic week of crazy earnings all over the place. We had, Tesla, Pins, Apple, everything else under the sun. Uh, what are you looking forward to this coming week now that some of the massive earnings plays are out of the way? What type of research are you doing? What type of names are you digging into?
Yeah, so as I was saying before, like next week is Uber reporting and also Square. So what I'm really looking for this from these companies are the guidance for the coming quarters, and I really like companies that have dual business segments. Let's say, so for example, Uber, they, even if the COVID situation would get worse in any way or fashion, they still have the delivery, the food delivery segment, or if the recovery goes well, they have the mobility unit. So you have growth coming from either way, and also Square, I think, is an example as well because yeah, Cash App was and still is growing like crazy, and I don't think it's a COVID stock. I don't think it's only the stay-at-home stock because when people start going out and to bars, etc., they will still use the Cash App. So you will see peer-to-peer transactions increase, and also in terms of their POS units and their B2B side, I think you could get a boost here. So what I'm really looking for is the reports from this, let's say, growth companies that are not, let's say, that weren't the big beneficiaries of the lockdowns, because I think this segment could bode well for your portfolio, or at least for my portfolio in the short term. And on the other hand, I'm still like, even though the market is not giving the returns when my companies are reporting, if the results are good, like Facebook, like Pinterest, like other companies you said, like, I don't care. On the long run, uh, the thing that is better and matters more is that the performance, the financials, the numbers are going in the right direction. And even though the short term stock price aren't, you shouldn't really worry about it, especially if you're not a, let's say, short term trader or or short term investor. So if you're in it for the long run, this could be a period for you to really look at your portfolio, stabilize, and focus on high conviction names.
Absolutely. I think that that's a strong piece of advice, especially for beginner investors who might be getting very caught up in these massive movements, right? After hours, you had pretty decent earnings, but you're taxed down 10%, right? It's like, what do you do next? And a lot of people scramble. I hope that they're not selling the stock down at that point. Maybe they're averaging down, maybe they're just unsure, they're worried. So I like your take to it to be very methodical and very approached. And to continue, saying that we have more earnings coming up, right? We have Uber, Square. I'm just going to keep doing my analysis, keep being comfortable with my company. So thank you so much for that. And, thank you to everybody. Also, I just want to say who's listening, I hope that you're all getting a lot out of this. These are some of my favorite people to learn from on a daily basis, with analysis, with bettering myself from an investment perspective and a business perspective. So I really hope that all of my listeners go ahead and just check out the profiles of my speakers. You can just click right into them, give them a follow. You can't go wrong. These are just fantastic quality speakers up here. So with that being said, thank you so much, Rahard. I hope again that you can stay on and continue to listen. I understand it's very late where you are, but I really appreciate you making the time for us today.
Thanks for the invite. And yeah, I have to stay for Gannon.
Yes,
I mean,
yes,
I can finally hear Gannon. We haven't spoken in like ever, but been friends for a while. So I'll wait for Gannon for sure.
I know that sexy voice. Can't get away from it. All right, we're gonna go real quick. Okay, so I got another person who has never been on my spaces before, has never used spaces before. So I love being an introduction for people. So without a further ado, we have Hot Stocks Luke on here. Luke Jacoby. He's a host of the Benzinga show. I was actually on Benzinga with Luke last week. It was fantastic. He gave me the opportunity to show off the Wolf app. If anyone's actually unfamiliar with the Wolf app, real quick, go ahead and check out the link in my bio. So many people who are actually on this call and about 50 different creators on Twitter have been working with myself and my team build money Twitter is what I guess you could call it in short. So I would really recommend going ahead and checking that out. We actually have a lot of usernames still open yet. So if you want to see if maybe you can get like your first name, your favorite username, something you can't get on Twitter, go ahead and check that out because it's gonna be the next big thing. Now, moving over to Hot Stocks, dude, I had so much fun on the show. Last week, I know that you get tons of tickers coming across your face every single day. So just point out to me maybe some of those interesting stuff that you saw today, what you're looking at for the coming week, what you're trading, what's going on, Luke.
Yeah, man, what's up? Thanks for introducing me to spaces. It's something productive. Like all my high school friends, they introduced me to unproductive things, so we're already off to a good start here. So that's good. But cool. Yeah, I'll throw out a couple ideas, a couple things that I think are interesting right now. I'm just gonna rapid fire through them. Does that sound good?
Absolutely.
Cool. All right. So one that I hit today. So if you're still a bag holder in a lot of these SPACs, like I am, I went ahead and sold covered calls against a handful of them. I think it's a decent move to make right now. A lot of these SPACs that have fallen out of favor over the past couple of months and in the past 2 weeks have finally started to get some energy again. And you can get some very decent premiums selling covered calls against these SPACs if you still own the stock. Like one of them today, as an example, like I still own Clover Health. I don't know why, but I still own the stock. And I was able to sell covered calls against it for the premium I collected was 8% of what the stock is trading at right now. And at a strike price that's 40% higher than where the stock is now, in only 21 days, on those calls, right? So to think about that as my worst case scenario, right, is that the thing runs 60%. My strike price is 40% higher, and I'm forced to sell my shares at a 40% premium for what they're trading at today. And again, I'm collecting 8% of that current stock price in premium right away. So I think that with some of this recent energy that's gone back into these SPACs, you have a lot of people who are starting to buy some of these calls that are way out of the money in these things again. It's pushing the prices up. And so you can go ahead and write some covered calls on these, collect some money now. And again, if I have to sell a stock for 40% higher than where it's at right now in the next 20 days, I'm fine doing that. I'll sell those shares all day, especially when they've been a bit of a dog. So there's one there. Another one that I'll do. I'm gonna say New York Times, ticker NYT, November Yankee Tango. I think that this stock in particular and a handful of the media stocks are decent to get out of right now. I'm like have been eyeballing and I'm looking to maybe get some sort of a put position in New York Times. And there's a couple things going on here. In markets, you always have an advantage when you have more information than other people. And because I operate Benzinga.com, which is a fairly large, financial media site, it gives me like a lucky look, a lucky advantage to see some of the traffic trends. As the world is opening back up, as we're getting into these nice summer months, people are getting vaccinated. The news cycle is dying down without Trump, just going off on something novel every single day. Our traffic on Benzinga.com, and I talk to a lot of other media sites every single day, is starting to see decreases. I have no reason why I would think that New York Times is an exception to this rule. If you want to play that trend, it's like pretty much the only pure play stock market way to be able to trade that. And again, the thesis is people are getting vaccinated. The news cycle is less interesting. We're heading into these summer months. New York Times has been putting up crazy user numbers over the past couple of years, especially the past year with COVID. everybody's inside. That's starting to end. That takes away a lot of what they have going on for them. So there's number 2, and I'll hit a third one, which is Leslie's, ticker LESL, Lima Echo Sandy Lima. The pool stocks. They sell pool supplies, pool chemicals, pool pipes. I don't know. I don't own a pool, but anything that you can need to operate a pool, that's what they sell. One of their peer companies, Pool Corp, ticker POOL, put out blockbuster numbers earlier this week. I got into the stock a couple weeks ago, basically on the thesis of they're in what's traditionally their slowest quarter of the year, and the southern United States froze, like Texas froze. If you guys can think back, like 2 months ago, which is in the quarter for which Leslie's is going to be reporting next week. We had all of these states that are usually warm, have pools open all year. They froze over, pipes burst, people need to put chemicals back into the water, that whole sort of thing. And the analyst estimates, the sales estimate has not moved, right? The analysts have pretty much the same consensus estimates that they had before. Half the country froze over unexpectedly. I think that's a boon for sales, and we should get some good numbers out of Leslie's. So those are 3 things that I'm looking at right now, taking a little bit of action on, et cetera.
I love that. Just took 3 main topics and broke them down really nicely. Honestly, we could do a whole call talking about covered calls and how that works and what strike prices to look for. So we'll have to have you on again for that, because I'd love to dig more into it. I think there's a lot of interest from the audience. A lot of people don't even know how to even go down that path, let alone, you got to learn options first. One thing I have a question on, because I know a lot of stocks come across your desk, is have you seen anything on Skyworks, SWKS this week?
I don't think so. Should I have?
No, not necessarily. I just had a question from the audience just on Skyworks. So not going on Skyworks then. One of the things I wanted to ask you, since you're a host on Benzinga, is just, over the last week or two, myself excluded, who's been the most interesting person that's been on your show on Benzinga, and kind of like, what did you learn from them, in the investing world?
Yeah, for sure. So I'll throw this one out there. Direction ETFs, DIRXION, Direction. If any of you trade those crazy ETFs, like the 3 times levered gold ETFs and stuff like that, they are the maker of those. And the reason that one was interesting is he was basically going through the fund creation process. So Direction recently launched 2 new funds. They launched a hydrogen fund, and they launched a moonshot fund. And so the hydrogen one, I mean, that one's obvious, right? Companies that are getting revenue from hydrogen related industries. The moonshot one is basically companies that spend a shit ton of money on R&D. Like all the stocks that hold the most R&D. And it was interesting to hear him talk through, like, what is their process for developing these, right? Like, I'm sure we all have ideas for a million ETFs. Like, I want to make an ETF of all the places that Benzinga spends money on, like HubSpot and Salesforce and, Fastly and that sort of thing. But basically it's like, yeah, we just see, they see the energy in the market caps of these stocks exploding. There's not a fund for them. Then they go out and make a product. So it's sort of cool to understand how that, ETF fund launch process works.
That's awesome. Yeah, it's very cool to see with ETF fund launch. I've been lucky enough I know Will Hershey and Tim Maloney, who run Roundhill Investments. And I was actually I had no part in it, but I was able to kind of communicate with them as they were launching their fund subs, which track streaming services. So it's very interesting to see stuff along those lines. So thank you so much, Luke. And the last thing I'll hit you with before we move on to the next speaker is, what are you looking at next week?
There's still a ton of earnings, right? Especially on like a lot of the big stocks, like the household name stocks. Okay, we got through them this week. Next week, there's still a lot of earnings. And the week after that, we'll still have a lot of smaller stocks that are putting out earnings, and these are some of the runners. I love buying high and selling higher and trading into momentum. So if we get some good guides out of these companies, or we get some surprise announcements on top of some guidance, I always like to look out for those ones.
Absolutely. Awesome. Love to hear it. Appreciate you being on here, Luke. We might even have some time to come around for some more questions afterwards, but right now, I I want to get on to a couple of our other speakers. So as you heard from the Hard, we've all been looking forward to hearing from Gannon. Gannon, making yourself a regular on here. I think this is 2 weeks in a row on the Weekly Howl, so love having you. We also, we get to chat. We've done a couple of Zoom calls, so that's been really fun, just being able to chat and talk. But yeah, man, I just, would love to hear your thoughts on what was buying and selling this week. I know that you're looking at earnings. I'm sure you're looking forward to Uber and Square earnings. So floor is all yours.
Yeah. Hey, man, thank you very much for having me on again. This is, always have a great time on here. Seven Investing, I think he just left the space, but they're a great group of guys. Austin Lieberman, I know he doesn't work there anymore, but he was kind of like one of the first, I guess, bigger accounts that followed me. We got to know each other, great guy. And then my man, Rahard, my man. There's a reason why this guy's account's blown up. He knows his stuff. And I think we followed each other back when we had I don't know, 1,000 or something followers, and we've chatted, and he's a great guy, very smart. And I love that he invests in companies that I own because it makes me feel confident. Moving forward, there was a couple things that were mentioned that were pretty interesting to me. I can't express how good of Apple earnings there were. I know there was a lot of earnings over the week, and I own a lot of the companies: AMD, Apple, Tesla, Facebook, Microsoft. But for me, Apple just stuck out the most. And what I'm seeing is that with the future of Apple coming up, especially with I really don't think the M1 chip is fully priced in, and I think the M2 could change the whole game again. And I really do think that the M1 chip in itself has changed the game. Apple this week really just crushed it. Every single segment they were just beat on everything. Some as much as 24% year over year, and others as high as 94%. I mean, iMac sales, iPhone sales, iPad sales, everything beat. Now just going over, the revenue was 89 billion, the expected was 77, EPS 1.4, the expected was 99 cents. So that's just a flat out beat on those metrics. But, going over this M1 chip, I just got the new MacBook Air, and I was editing a video last night for the podcast that I just started. And I had a late 2013 MacBook Pro, and using Final Cut Pro on that was essentially like juggling knives, because every time I did anything, I would have to get more storage, or things weren't rendering. I used the MacBook Air last night, and it was incredible. It's been incredible since I bought it. And for the people that are out there that are just like, okay, what is the M1 chip? We could do a whole space on that in itself, but just think of it as this: it's a system on a chip. So, it's integrating different components: the CPU, the GPU, the RAM, the neural engine, the SSD controller, image signal processor, kind of all these things on a small chip, a square. And that's why you see these new Apple products coming out, and they're as slim as, the iPad. My MacBook Air is incredibly slim. The iMacs that just came out are, beautifully designed. Would I buy one? Probably not. But you're getting the point. The reason why these Apple products are coming out slimmer and slimmer and slimmer is because these, cutting edge chips that are, quote unquote ARM chips, instead of using the past and going with Intel. And every time that Apple moves further away from Intel, which they've made very clear that's their goal and what they're already doing, it just puts Intel in a worse position. And now, there's all these rumors starting out. Again, remember, the M1 chip kind of just came out this past year and a half. I don't know the exact timeline, but there's already rumors for the M2 chip, which is just going to be that much better. And we're seeing one of the biggest, Apple beats I've seen personally in the past couple of years. and the stock is like sideways or down, it, just makes me kind of laugh. But like Rahard said, honestly, a lot of these things have to do with guidance. I don't think Apple gave bad guidance, but it seems like with these earnings, it's like whatever the stock is up, after hours, the next day it opens up either equal or lower. So it's just a trend. Sometimes these tech earnings, they have a trend, and every single tech company within them follow that trend, whether it be red at open or red after hours, even if they produce great earnings. I mean, I thought Microsoft had great earnings, and I think Google a little outshone that. But yeah, I just wanted to speak on Apple because I just think it's, undervalued in my opinion. I think the fact that people are saying, this is a, it's hard to say that a $2 trillion company is undervalued. I know that's probably shocking to hear, but it's just like these M1 chips are incredible. They have these M2s coming out, and you're seeing in all these products that came out with the AirTags, and everyone's kind of laughing at the AirTags. Well, guess what? Everyone laughed at the AirPods, and that has been a huge, small little segment, growth segment for them. And now it's become, a featured line. Everyone wants, you don't have AirPods? Don't talk to me, So, that's just one thing I wanted to speak on. Another thing I wanted to speak on, and I'm going to tell you guys straight up right now, with whole tech earnings, it seemed like this just flew way under the radar. UFC practically IPO'd through their parent company, Endeavor. Again, this flew so under the radar that I actually saw it like while it's happening. I didn't even know it was coming up. I don't know how it didn't show up on Twitter or whatever. The ticker's EDR. It had a great 8% day today. It opened at like 25, I believe, 24. This is just a very interesting company for me because I am a big UFC fan. I love the UFC. I understand that Endeavor doesn't just own the UFC. They own IMG. They own IMG, which is a big sports talent entertainment company. They have some professional bull riding companies. And I can't speak too much on the dynamics of Endeavor. That's something I need to get into more. I don't want to lead anyone astray and speak about something I don't truly know. That's why I haven't bought the stock yet. But I'm very bullish on the UFC. I loved how they, got so creative during the COVID pandemic there was not another sport in, I think, the world that got as creative as UFC. Let's go rent out an island and get these people to do what they love to do. Yeah, that's what I got for you, man.
I love that all. And also, I'll just echo with Endeavor. I just took a look at them, right? There could be a lot of future potential. If you're looking at the UFC, this being a parent company, they're not, not even $600 million market cap. It's tiny right now in comparison to some of these other companies. And then with the deals that the UFC is bringing in and only getting bigger as a sport, as you mentioned, with their creativity this past year, and Dana White at the helm, who's not going anywhere, and they've got Joe Rogan commentating, and a bunch of other stuff. I think, yeah.
One thing I will add, and I can't believe I forgot this, Elon Musk is on the board. One of the main guys at Endeavor, I don't know if it's the CEO or the founder, has had like a 15-year relationship with Elon Musk, and he is on the board of Endeavor, which, just that adds another element. And then just talking about the generalities of all these IPOs, Airbnb, Snow, all these big names is, I'm starting to get more attracted to these IPOs that go under the radar, maybe aren't on Twitter, maybe aren't on the Discords and the chat rooms. This thing was so under the radar, I didn't even know it happened until it was happening. And that's why you didn't see, the crazy valuation. I don't know truly if the valuation fits what it's at right now. I have to do more research on that. But, this isn't a Snow listing where it quadruples in price at open. And that's attractive to me right now.
Absolutely. I also just noticed that they own EuroLeague too. Did you know that, in addition to UFC?
Yeah. I'm looking at it. This is what they own. So it's UFC, IMG, WME, which is the Williams Morris Endeavor Entertainment, and that has like a huge umbrella of Frize, the arts event and media company. So again, with a company like this, it's important, and that's why I haven't invested in it. Is you got to know kind of the gist of all these companies. You can't just invest in this company, in my opinion, based off of liking and knowing the UFC. Obviously, you know that's going to be probably the main ticket for people to buy, but just kind of like the same thing with Penn. You can't just invest in Penn based off of Barstool. You have to look into actual what Penn does. You got to look into what Endeavor does as a whole, not just what UFC does. So I don't know. They could own Euro. What did you say it was?
The EuroLeague. EuroLeague, it's
Yeah, that's possible.
yeah.
I don't know. I'm not seeing it on the
I
site.
believe. I mean, I think it looks like they do own EuroLeague. I think that.
Wow.
Yeah. I mean, that's huge. If you EuroLeague, like, could be pretty crazy.
Yeah. I mean, this came across my page like literally yesterday. So, you know, I've done, an hour of research on it. So I just wanted to, people were throwing up stocks up there. You know, that's just something that I'm going to start researching and, get on people's radar.
Yeah, real quick, Rahard, because you stayed on for this and you wanted to hear from Gannon. Do you have any thoughts on anything that he just put out there?
Yeah, maybe one bite. Everybody knows the rules. No.
Yes.
Seriously. Yeah, I mean, I didn't notice the IPO he mentioned, so interesting. We'll definitely take a look. But in general, yeah, I agree with him regarding the like that you're right now in some kind of environment where even though you report blowout numbers, you're probably not going to get rewarded the way you should be in terms of stock performance. So I guess investors just have to take that into account, and expect that stocks maybe aren't going to move the way they did before, only if something really, I don't know, exceptional happens. And that's just the way the market currently is. We'll see how the next weeks will go, but maybe we get some more love in companies that will perform or are basically having better numbers in after the COVID. So after the recovery, we'll see. But so far, it's a hard market to be in. So yeah, but if you're a long-term investor, you don't you get this kind of periods all the time. So it's nothing new, right? So yeah, but in terms of like, this is also what Gannon mentioned. I think it's very important, especially for the new class of investors. As he said, if you want Pan National, you have to know what it actually is. If you want to own the stock, if you want to do analysis, it's not just one part, similar to other companies. So if you have high conviction, then you really are able to hold these companies even in tough periods. If you don't, then you're probably going to lose money because you're going to sell on the first drop. So yeah.
Absolutely. Gannon, any other thoughts on that before we move on to another speaker?
Last thing I'll say is, I'm going to have my fingers crossed for Uber and Square next week. Really excited. Cash App numbers are probably going to blow everyone's minds again in my prediction. And I agree 1,000% on Uber with how I think it's a perfect play for during COVID, after COVID. Very excited for next week.
Awesome. Love to hear that. Real quick, before I go to our last speaker, who I have been in a space with before, but has not been on one of my spaces, so I'm very grateful to have Nick here. I just want to let everyone know that I have a ton of spaces coming out next week, all along the same themes of investing, financial literacy. So if you are enjoying them, please go ahead and just check out my profile. Would love to have you all join the Wolf Pack. I might answer basically every single DM that I get. And I just like to continue to bring more topics to you. Just so you all know, on Sunday, I'm going to be in one of Max Bozenko's spaces. I'm going to be presenting on Futu there. On Monday, me and Max are going to be co-hosting a space that is going to be, I believe, at 7 p.m. with Brian Feroldi and Chris Peruna. And we are going to be taking basically question and answers from the audience. So if you have questions for Brian Feroldi or Chris, who are very hard to get a hold of, because they both have a ton of followers and are really smart people, that's another reason to just go ahead and join the Wolfpack. Give me a follow, shoot me a DM. I will do my best to bring that up to them. On Tuesday, I'm going to be hosting a financial literacy space, a super diverse panel. We're going to be going into all areas of financial literacy, whether that's buying a home, getting started in crypto, getting started with thrift shopping, different areas. So you can check out the lineup for that. And then on Wednesday, I think I'm going to have a space. I haven't planned it yet. On Thursday, I'm doing 2 different spaces. One in the morning with Jonah Lupton, a Q&A that got really good response from last week. And then I'm doing a 5 p.m. EST Twitter space on Thursday covering the cannabis industry again, because we got a ton of great feedback. The Wolf of Weed Street is going to be on that one, if you've ever seen him before. And then next Friday, of course, I will be having the Weekly Howl, as I do every single Friday. I'm going to be posting again after this. I have a Google Calendar, a public Google Calendar that you can join. It won't share your information with anybody, but it'll allow you to see when all of my spaces are being held. And of course, I always upload any recordings that I have to my YouTube, and I've started uploading it to my Spotify as well. So I'll post that information as well. So yeah, just go ahead and join the Wolfpack, and I'd love to have you. And without further ado, I'm going to move on to Nick. So I actually did a podcast with Nick this week, mind-blowing stuff covering Coursera. This guy does his freaking homework. He's got the setup and the brain to prove it. So Nick, it is so fun to have you on here finally, and I'd love to hear from you about what was on your radar this week.
Well, thanks for having me, Gav. I wanted to briefly touch on earnings just because that seems to be a topic that's come up a lot. I think I put out a tweet this week, something to the extent that it's not that businesses miss on metrics, it's that analysts miss on estimating them. And I think that that's generally true. When you look at an Apple that's almost doubled in a year, you have to post some numbers that are almost not even conceptualized by the human brain for that stock to move. So thinking in terms of that, this week, I'm going to talk about a few things that I was looking at this week, but the market and these companies have had a huge run over the last year. So I think that 2021 and maybe even early 2022 is just going to be sort of a time for patience, for watching, and for holding your gunpowder dry and doing your due diligence. Just because of the fracture in the market that we saw post-COVID. I think it's weird but totally conceivable that stocks will perform much better in a year where we have a huge pandemic versus a year where we're recovering out of the pandemic. It's just something that happens in markets. They're not really rational over the short term, and it's always forward-looking. So a lot of this has already been priced in. But yeah, as far as my week, something that I guess is interesting that happened was MindMed got uplisted to the NASDAQ. It's a small holding for me, but it's probably one of the most interesting companies that I've come across probably ever. It's a small biotech company. I think their market cap is floating around $2 billion. They're basically in the developmental stage of using psychedelics, psilocybin mushrooms, compounds in LSD, ketamine, things like that to treat depression, anxiety, PTSD. That's a big problem is vets coming back with PTSD. We lose, sadly, a lot of vets every year to suicide, every day to suicide. And there's nothing really out there that seems to work to help these guys. But there have been some interesting clinical trials around MindMed. I have a buddy who's been struggling with severe depression his whole life who has done ketamine therapy with pretty much great success. The effects do wear off, and he has to go in about twice a year, but the transformation has been pretty crazy to see. So I think this is something that's slowly going to be adopted over time, the products that MindMed is pushing, not only because I think people need relief, and unfortunately it's a big market, but what's currently available, I don't think people are terribly thrilled about. A lot of the antidepressants, anything that messes with the chemicals in your brain, they have side effects. And I think that finding some sort of a holistic alternative is a positive. There's a lot of interesting stuff about psilocybin being able to open up new pathways in the brain. And it's it's a mushroom. So I think it's an interesting company. It just got put on the NASDAQ, and I think it's one to watch. I was buying it when it was still on the OTC markets, and it's a company that I think has huge potential, but is also has a lot of risk. So it's something to look at, but I don't think it's a company for everybody, to put it mildly. Funny enough, I'm pretty sure Mr. Wonderful, Kevin O'Leary, is still an investor in that company. So for the guy that he makes himself out to be, I'm sure he had fun when he was younger, if he's as into this company as he is. So next is going to be Olo. Olo's been talked about quite a bit by Brad Friedman. He kind of put it on my radar. He's been on some of these spaces, but it's an interesting company. Again, smaller. I put on a small position. What they do is essentially they have a cloud-based commerce platform for ordering food from restaurants or pickup. So the restaurant uses their software to connect with the customer and to put the customer in contact with third-party delivery companies like Uber and Grubhub and things of that nature. So as bullish as I am on that, and I think it's a very efficient company with high margins, and it's an area that I think is going to continue to do well. Really, my bull thesis looking at this company is that commerce is going to continue to speed up, and what Bezos did with Amazon with next day delivery and things of that nature. If Olo really hits it out of the park, they might be able to squeeze in same hour delivery for a lot of things, especially perishable goods like food. But the same could be said for if you want to, do grocery shopping, and if grocery chains started using Olo's software to pick up groceries same hour or deliver groceries same hour. I know Amazon does that with Amazon Fresh. But basically anything you want on demand. Hardware stores, if you have guys out in the field working on something, if a hardware store chain offers this service and can get supplies and tools out to guys within an hour and a half. So it's basically a bet on commerce speeding up. And I don't really see a world 2 to 4 years out where commerce does not speed up. So small position, I'm still doing my due diligence on that one. But I think it's interesting, and I think it's going to be something that's going to be pretty sticky. I also have a position in Uber, but Uber's a little bit more of a messy company when you look at it in comparison to Olo. And Uber has an interesting two-sided market in the sense that if you oversaturate one side, you start to negatively affect the market entirely. Whereas something like an Etsy, the more sellers you have, the better the experience is for the buyer. If Uber floods the market with drivers, now they have excess cost and they don't have enough demand, generally speaking, to meet the supply that they put out there. So there's a lot of ways to look at two-sided markets and things like that. But I think Uber's a verb stock, and I like the valuation that I've been buying it at. So it's also in the portfolio, and that's coming up next week. And then lastly, I just want to go over Coursera. I talked about it with Gav on his podcast. I'm currently doing a full in-depth write-up on the company. I think this is going to be a top 3, top 2 position for me if I can get it at the right price or if the right technical setup presents itself post-IPO. I don't really like getting involved in IPOs terribly early. But people talk a lot about healthcare being a big area for disruption. I think education is equally as big of an area for disruption. The problem is that both of these areas are hard to disrupt. They're embedded in our system. They get trillions of dollars a year in federal funding, and it's basically part of our society to view academia and healthcare as we do, for better or for worse. But Coursera has a huge market basically that they're going after. I just want to read off some stats here. This is from the article that I'm going to be putting out. It's on my Substack. It'll be free if you want to go put your email in. But these numbers kind of blow my mind. So I wanted to get them out there, and then I'll talk very briefly about sort of what Coursera offers and why I think it's a good long-term investment. So as of 2020, the average annual in-state tuition, and this is just 1 year, is roughly $25,000 for 1 year and roughly $101,000 for the 4-year degree. And this is going off of bachelor's. Your average annual out-of-state tuition is $41,000 over 4 years, it's $163,000. Average annual private tuition is going to be $51,000. Over 4 years, you're looking at $203,000. Okay, so 89% of students attend public in-state, which is about 13 million students. 11% out-of-state public, which is 1.6 million students, and 21% attend private institutions, which is about 5.1 million students. So annually, we are looking at a total tuition expenditure of $329 billion for in-state, $65 billion for out-of-state, and $262 billion for private tuition. So American families are spending currently annually $653.3 billion a year to educate their children, and are currently adding to the 1.57 trillion we have in student debt. So it doesn't take a genius to see that those numbers are, to say it politely, unsustainable. So Coursera is basically offering a less expensive, more efficient approach to educating people. They offer over 1,000 guided projects. They offer over 4,600 courses, specializations, certificates, you name it. They have a pretty wide catalog. And basically, they're just trying to give the consumer, the person who wants to learn something, job-ready skills at a lower price, at a lower opportunity cost. As mind-boggling as those numbers are, if you get a good job with your degree, you can earn that back. What I think is equally as bad is the opportunity cost. You know, when you're in your early 20s, you should be focused on setting goals, taking risks, learning, failing forward, things of that nature. And when you have 4 years in college, I think you can make the argument that you're not getting a lot of life experience that you could be getting if you were in the field, maybe doing an internship and also taking a course on Coursera. So that's essentially the thesis for Coursera. I've been a long-term Chegg shareholder, which I also like. Obviously, we're not going to throw away college. I think this is something that over the long run is going to slowly be disrupted. They also offer blended learning, so you can go to an institution. The institution brands it as their own material through Coursera, and you can actually take a blend of in-person and online classes. So you can still attend college, graduate sooner, and at a lower cost. So I think that that's also a win-win. And it's not just colleges and places in academia. Unity is, a company that a lot of people like and talk about on FinTwit. Unity offers over 15 courses on how to use their software program to possibly get a job with them. Google does the same. So a lot of these big companies are sort of realizing that they might be able to bypass these educational institutions, offer a person a low-cost alternative, and then basically pool the talent for themselves. So I think it's an interesting company, and hopefully I can finish this this article in time. It should be out later next week, but it's probably going to be around 6,000 or 7,000 words. I'm trying to go over every aspect, the total addressable market, because this is a global company. I mean, 51% of all their revenues are outside of the United States. They're seeing a lot of global growth. So that's basically what I've been up to, mostly spending my time on Coursera, but for the most part, just trying to hold myself back and let the market digest what's happened over the last year, let the fundamentals backfill. And to be honest, I could see myself deploying some capital towards the end of the year, maybe early 2022. But for right now, I don't see anything terribly, terribly interesting. So that's it. That's what I've been up to. You got anything else to add, Wolf?
Well, first off, I'll say that was a fantastic condensation, or I'm not going to even find the word. That was a fantastic way to take the 30-minute podcast that we did and kind of transform it into a nice little 8 to 10 minute Twitter space there. For those,
I'm sorry, no one has to watch it now.
Right? Yeah, no. So what I will say though is for those who want to listen, Nick really does have a mind for this stuff and goes to the full depths of the earth here. So what I would say is go ahead and check out his profile. You'll notice he's got that sweet follower to following ratio for a reason. And you should go ahead and check out that Substack because he's putting out just consistent quality content. And I loved my podcast with him. And it was just obvious that he knows what he's talking about. I also like that we're finding all these companies that recently IPO'd. Coursera just IPO'd in March, I think. And so it's nice to find these things early. And what I'll tell to my audience is listen, to how my speakers talk about how I found this company, it just IPO'd, but they're not saying, and I bought it because IPOs go to the moon. They're saying, I really like the company. There's an opportunity now, it's public, but I'm going to take time and study the fundamentals. I'm going to, if you're doing technical analysis, wait for perhaps a strength or a spot, of resistance, of a breakthrough, something along those lines. So it doesn't have to be so fast to buy. And even if you see someone post something awesome on Twitter, right? Like this company, I'm going to be talking about Futu on a space on Sunday. And Futu, there's a lot of really easy metrics that are eye popping. Revenue growing 212% year over year. Their total client assets going 227% year over year. Like you could throw these things out, but what's the bear case, right? What's the reason why I shouldn't? That's not usually what you're going to get. And that's what you need to go and look for. That's what you need to go and do the due diligence on. So I think that, there's a lot of powerful messages coming from up here, and I really like it. So, Nick, I hope I added some color to it too. Is there anything else you want to add?
No, I totally agree with what you're saying. I mean, I really like this company a lot, but to add to your point, I haven't bought a single share just because I have jumped the gun and I've been burned. So I've learned. There's nothing wrong with letting price consolidate or learning more about a business and paying up for it. There's also nothing wrong with waiting for a technical setup, getting in, and the technical's breaking and taking a small loss. There's nothing wrong with harvesting 2 or 3 small losses before you get the right setup and the investment becomes, a 5, 6, 7x. It's part of the game. So inactivity wins over the long term.
Absolutely, couldn't agree more with that. And it's funny to me. I've always had those professors who would tell us, like, whose portfolios at Fidelity have the most money? The people who are dead because they can't make any trades anymore. And they weren't joking. There's like portfolios that are just sitting there, right? And they're actually accumulating over time. It's a pretty crazy study to look at. So real quick, we're going to have one last speaker for everyone. Just hang out with us for another like 5 to 8 minutes. That's going to be Stock Market News. Love to bring him on. He's really honestly, Stock Market News is just like a public service to our community, just consistently bringing news really fast, really quick to Twitter. So like what you were on Twitter for, which was to get news fast, that's what he's doing. So I love having him on. Also, if you are enjoying this, I just talked about the calendar. I talked about my YouTube and all that. I just made them my pinned tweet. So I just threw that out, my Spotify, my YouTube, my calendar, also the Wolf app. Need more people to come and join that community on the Wolf app. Seriously, we're trying to build social media of the future. So if anyone wants to do that with us, come and join. But without further ado, Stock Market News, just give us kind of maybe a little end of the week wrap up on what you were looking at this week.
Yeah, hey, what's up? I appreciate you for having me, Gav. I always love to talk on these things. Happy to be here, and I really don't have anything prepared. Kind of just what I've been doing for this week. I think that honestly a good way to start it is like 2 things I noticed from this week and I was looking at. So the first thing, it was talked about a little bit earlier, but like how under the radar the Endeavor IPO, the UFC parent company IPO was. I was really shocked to see absolutely nobody talking about it on Twitter. I didn't hear any buzz about it the day before. I barely even heard about it until it was about to go public and start begin trading. So that was one thing that really shocked me. And then another thing that I know everybody was looking at earnings this week. I was as well, very time consuming. But I think that there was a couple rumors that were circulating around this week. One was that Facebook was going to buy Bitcoin, and another was that Amazon was going to do a stock split. And, there's always the chance that, I say this now and then it happens tomorrow or something, but they didn't happen. And honestly, in my head, the Amazon stock split rumor is a major reason why the stock is down today, that it caused a run up in the price before the earnings into the earnings, and the earnings were amazing. Amazon blows it out of the water like they always do. And the stock goes down because they didn't announce a stock split. In my personal opinion, I think it definitely played into it, but I think that moral of the story is don't always believe these rumors, especially when it says dash sources after. You have no idea where that's coming from. So I think that's some moves that I made this week. First thing, I'm definitely a long-term buy and hold investor. I love dollar cost averaging in over time. So I don't really make many sells. The only thing I sold this week was Fizz, National Beverage. They make LaCroix. I've held the stock for over a year, had a very nice run up, and I kind of want to diversify away into other areas. One stock that I started a position in this week, kind of as a small swing trade, was Pinterest after their earnings. I saw a beatdown stock that I've done the research into in the past, and it was always trading at a very high multiple and high area, and it still is. but I'm willing to take the short-term gamble on it, and we'll see how that goes. I think that another interesting move I made this week was Penn National. I heard some of you guys talking about that. I actually decided to buy a little bit more for the first time since it was $20 or $30. My average cost basis is around 14, and I bought when it dipped below 90. What really signaled me into that is kind of this hearing Dave Portnoy talk a lot about the strategy and the underlying strategy of allowing these other names in the industry of spending huge dollars on advertising right now, grow the entire market, grow everything. Barstool is going to sit there at their 15 to 10% take rate until the market becomes more saturated and they can up their advertising spend. I think that it's really important to look at the the power of free advertising and their ability to generate 10 to 15% market share with zero ad spend. And I think that definitely cannot be understated that they are making a profit. I think that another thing that drove me into this buy at this time was, the price dipping, but also I was able to see the MGM Resorts numbers for their Las Vegas occupancy. And I know it's not, apples to apples because Penn doesn't have any Las Vegas, a Las Vegas location, but the occupancy was picking up. I believe it was 66% for last month, and I think it was so far month to date like 73% or something along the lines of that. Showing that the trip market, the casino market, the whatever is slowly starting to come back. So I was kind of triggered me to get into this buy. Couple of things I did this week. When Bitcoin fell under 50K, that was a signal for me to buy in. My cost, I've owned a lot lower. My cost base is around 12 to 10K at this point. So, I've had to reevaluate. It hurts buying and raising my cost basis, but at that under 50K price, slowly dollar cost averaging in, it felt like a good area for me. And then I made a couple other moves, but one other major move I made this week was Skyworks. I know Gav actually asked about it earlier, said the question came from the audience, and then it was actually me. But yeah, that's one name that I was buying this week. They reported earnings this week. They also announced an acquisition. I don't know the exact price, but I remember it being over $1 billion. Just to very, very quickly, Skyworks is a semiconductor company. They're very much known as, bringing parts for iPhones, for phones in general, but their by far main customer is Apple. I would encourage you guys to take a look at their financials. They might, it's going to definitely change a little bit now with a major acquisition, but before they were very, very strong, no to little debt on the balance sheet. And pretty much the acquisition kind of brings them away from, just being an iPhone phone semiconductor company. It brings them a lot more into a really hot area right now, which is the automotive semiconductors. Those are very hot right now, a lot in the news because of the shortage. So that's just another space they're moving into. And I think that, I don't know, Gav, if you have any questions or anything like that.
I think that covers it really, really well. I'm just going to wrap things up if that's cool. I personally was pretty minimal in my trading this week. I did start a position in pins. Once I saw it sub 70, I was just pretty hot on it. Got in at $69.00. I also added to Twitter. My position with Twitter. I'm super bullish on Twitter. It's one of the first stocks I ever bought. Honestly, I didn't see until after hours, so I couldn't do it. But I saw that Fiducia took out January 2022 calls on Twitter, which honestly sounds like a fantastic idea, and I should have done today. I wish I had done that, but I'll probably take an eye on them on Monday. I'm just going to expect the stock's probably going to do like a 10% jump on Monday, just so I can't get the calls at the price I want. But that's really most of it for today. I'm going to get ready. Me and my brother are going to go out for sushi. I hope everyone else enjoys their Friday night. As always, I am Gav Blacksburg. I am the COO and the voice of Wolf Financial on the internet. And I just want to thank everybody for tuning in, taking some time out of your day to chat with us. And I really, really hope that you go and check out some of my speakers because they're just bringing fire content consistently. I love what I get to do. This is my full-time job, is just honestly being on Twitter and creating content and stuff. And I love it. So thank you to everyone. And I hope you all have a fantastic weekend.
So peace out, guys. Thanks for hosting this.
Yeah.
And showing me spaces for the first time.
My pleasure, Luke. My pleasure, Luke.
See everyone. Have a great weekend.
See y'all.
Thanks, Gav. Have a good week.
Have a good one. Appreciate you guys.
Happy